Good morning, Bitcoin, and welcome to a special evening edition of Bitcoin Talk Show. Today is Wednesday, July 25th, 2018. My name is Thomas Hunt, and here's what's happening today in Bitcoin. The price of Bitcoin was up 0.42% in the last 24 hours, with a last of 8,205, a high of 8,434, and a low of 8,067. That's $1 for 12,182 Satoshis. Today, we're talking to Nik Bhatia, the author of the article, The Time Value of Bitcoin, which we talked about last time Nick was on the show a couple of weeks ago, about how you could actually make interest or have an interest rate when you loan money on the Lightning Network. Now, Nick's back with a new article called The Bitcoin Risk Spectrum. So let's talk to Nick about how the Lightning Network can generate interest and Bitcoin and risk. How's it going, Nick?
It's going well. Thank you for having me again. I appreciate it.
Well, thanks so much for being here. I really enjoyed your article. I just read it a little bit before the show. The part that really stuck out to me, and I'm going to go ahead and skip to what I thought was the best quote, and so did all the highlighters. They tell me on Medium. It's just like the Kindle. I get those little reader insight things. But it says right here, the top highlight, Bitcoin staked to Lightning is the most unique income producing asset in all of monetary history. Income with no counterparty risk. The historical implications of this on capital markets are tremendous. So let's just start there. What does that mean? Why is Bitcoin staked to Lightning such a unique income producing asset?
Sure. So before I get into why it's so unique, I want to clarify about this zero counterparty risk. I'm not saying that there is zero risk. That is not true. With Lightning Network, if you have Bitcoin in your Lightning payment channels, you do have security risk because your keys are stored in a hot wallet. And you also have the risk of losing your Bitcoin via poor payment channel management. So that would be not executing your smart contracts properly, and if you have a malicious counterparty. So there's definitely some risk, but the unique thing about Lightning Network is that the coins are still in your custody, right? And that is what makes this such a unique income producing opportunity, because in the real world, if you want income, you actually have to physically lend money to somebody. And that means that person or entity can default to you. In Lightning Network, a malicious counterparty can try to steal your Bitcoin, but you have the ability to always broadcast what you know as the correct state. And additionally, there's a mechanism that dissuades any sort of fraud where you can actually sweep the Bitcoin of your malicious counterparty if you catch them. So risk, yes, but direct default counterparty risk, in the traditional sense, no, on Lightning Network, and that's what makes this, such a unique moment in monetary history, really.
Now, you have a chart in your article. I think we should spend some time talking about on the for the podcasters at home. On the left side of the chart, it shows cold storage Bitcoin, and you have almost no counterparty risk. You hold the keys; they never move; they just stay there. A little bit above that, you have the Lightning Network (RR), the Lightning Network interest rate. Maybe above this, in the middle, we would put lending your Bitcoin on an exchange, like you said, that you actually have to trust the exchange with your Bitcoin, whereas with the Lightning Network, you still control the keys. And then over here on the right side, with a lot of counterparty risk, is off-chain lending that I know a little bit about because I worked at a Bitcoin loan company back in the day. And as hard as we tried to properly verify people and to make sure that they were who they said they were and that they were going to pay back their loans, a lot of times people just took the money. Whenever you, and that was, we were actually letting them take the Bitcoin off the website. So that was a significant risk. So how would you weigh the various risks of these various options?
Right. So the point of this graphic here is to show really the wall between counterparty risk and no counterparty risk. When the Bitcoin that you have is in cold storage, you don't have any counterparty risk. The only risk that you have there is a private key management risk. If you store your keys on a single USB drive that you lose, that's a huge risk that you're taking. But if you have a really good multi-signature storage method, that can be potentially less risky. But in the end, that cold storage security is up to you. Lightning Network also provides a similar type of opportunity where you can make some income through routing fees. But again, the security of that Bitcoin is up to you. And beyond that line that I show, that's when it switches over to direct counterparty default risk. So that would include both the direct lending that you referred to, but also exchange lending. Because while there might be a risk difference between exchange lending and direct lending, both of those still require you to send an on-chain transaction, and the Bitcoin is no longer in your storage, in your custody. So the point of that graph is to show the difference between when the Bitcoin leaves your wallet and when it doesn't. And so Lightning Network, in Lightning Network's case, it does not, and that's why I have it on the other side of the line there.
Now, I'm seeing some concern from the chat. I'm sure they all want to know how we can keep our Bitcoin in our wallet or in a Lightning channel and still have control of it, yet at the same time still make interest. Does this make Bitcoin into a bank? Is there some kind of suspicious fractional reserve going on? How will people make interest? Just to recap, people that haven't read the first article.
Sure. So the interest is made via routing fees. So it's a zero-sum game. There's no fractional reserve going on here in Lightning Network. All Lightning transactions are Bitcoin transactions, and they're not valid unless there's a real Bitcoin there, because anybody can check the blockchain to see if that Bitcoin that you say that you're spending is actually yours. The interest comes from other people in the Lightning Network that are paying you to use your channel. So if you are, let's say you're buying a sticker from Blockstream, and you open a Lightning node and you only have one channel open, and that the channel is open to an entity that's not the Blockstream store, right? That payment can still get to Blockstream, but it's going to have to take a couple hops, right? And to get and to have access to Blockstream and Blockstream's node, you're going to have to pay to consume some time in each channel on your way to the Blockstream store. Each time you use a channel to get there, you're going to have to pay that node a fee. It could be as low as 1 Satoshi, or even I think sub Satoshi is possible in the Lightning Network. So anyway, that the fee is coming from the person that's using your channel, and then that person will have one less Satoshi to his name, and you will have one more Satoshi to your name. And that's where the interest comes from. It doesn't just appear out of nowhere. There's no fractional reserve going on. It's just somebody paying you for that privilege to use that channel. Now, I heard somewhere on one of the shows on World Crypto Network that they don't consider this interest, right? They consider it fees. While it is a fee and not necessarily interest, the only way you can make that interest is if you stake capital up front, right? You're making the money because you have payment channels open with Bitcoin in them. And so it requires capital. And you don't know how soon you're going to get that money in terms of routing fees. So you have to keep the channel open for a certain amount of time until you can make fees with it. So time, initial capital or principal, and fees are the three components to any interest rate calculation. So, it can be a matter of semantics, but the bottom line is you are taking money, locking it up, and making money from that. That's the definition of interest. And Lightning Network is a new technology, so if we want to call it something else down the line, we can. But for now, an interest rate is a decent analogy, I think.
Now, when the Lightning Network was built, it was built on a hub. Well, intentionally or unintentionally, it ended up with kind of a hub and a spoke model, where someone like Amazon might want to come in and be the lender, be the Lightning lender, be out there, have a bunch of hubs, manage their channels really well, excel at that, and then make more money from Lightning. Is that how you'd see the Lightning Network working? And is there a danger there of some kind of centralization, something like that?
There's always a danger in a free market of monopolization. Uh, and so is it possible that one single entity like Amazon comes into the Lightning Network and just undercuts everybody on fees and has the most channels open and stakes the most Bitcoin so that they're the best positioned node in the whole network, yes, unfortunately, that is possible. But this is a free market here, and so I hope that that's not the way it evolves. But I'm there's nothing. The Lightning Network already exists, so if Amazon wants to come in and do that kind of thing, they're welcome to do so. There are no barriers to entry other than the software that you run
And this
and
is
the
one
bit
of
and the
the
Bitcoin that you have to stake.
And this is one of the ideas for what we're going to do with Bitcoin after 2120. Perhaps a company like Amazon will require the network so much for their business that they'll be willing to mine it as a public service. This kind of ideas and or higher fees or something like that are the kind of ideas being floated for the 2120 running out of Bitcoin reward problem. So it's a similar situation. And if they came in and ran the Lightning Network as well, I mean, it's a little creepy, but other than that, they're providing a public service. They have a reason to do so. They want people to keep shopping on their website, presumably with Bitcoin and Lightning in the future. It may be something we have to accept.
And think about this. Let's say they charge 1 Satoshi to use all of their channels, right? And that's a lower price than other people want to charge. Then you're actually sending Lightning Network transactions for cheaper than you would otherwise. And if somebody wants to say, I'll only charge you half a Satoshi to use my channel, that person can do so as well. So it's going to be a free market. If one entity dominates, hopefully the price will be less for all of us. I know it scares people to think that it could get centralized, um, but it is a free market. If you don't want to use them, you don't have to. You can pay 2 Satoshis and use somebody else.
And I'd just like to ask everybody at home to give us a thumbs up and a share. That really helps more people find the show. And just to go on with what you were saying earlier, um, why do we need this word interest? I think a lot of the reason that we need this word interest is because we're attempting to establish something here. Something that you showed in your article was the expected return, and we start out on the far left with U.S. Treasuries. We go up a little to corporate bonds, up a little to equities, and then up a little to venture capital. Venture capital is much more risky than the US Treasuries, even so much that you have the examples here that Walmart would sell bonds at US Treasuries plus 0.6%, and General Motors would sell bonds at US Treasuries plus 1.37. And that once we've established this basic rate of the US Treasuries, we have the least risky investment in the system, then we can establish the other systems of investment. Is this something we could do with Bitcoin if we establish this lightning rate as our US treasuries?
Absolutely, I think so. And again, these are just loose analogies. Bitcoin is a new asset class, and so we might use certain analogies from traditional finance, and we might have to reinvent the language that we use. But I do think this example of showing a low risk to a high risk spectrum is a decent one for Bitcoin to follow. So the lowest risk is going to be cold storage, right? But the return on that is actually zero or potentially even negative if you factor in how much money it costs you to have your cold storage method, whether it's paying for a hard wallet, or if it is buying different computers that are air gapped from the internet, etc. Right? Your return is actually almost potentially negative with cold storage. With Lightning Network, it can be possibly slightly positive, but also maintaining custody of your own private keys. Uh, and then in theory, again, this might not end up happening, but in theory, if you're going to lend to somebody by actually sending them Bitcoin and broadcasting that transaction on the blockchain, the Bitcoin is no longer yours, and you have to hope that repayment happens. That risk should in theory be rewarded higher at a higher interest rate than you would earn on the Lightning Network, and so on and so forth. So the Lightning Network is potentially a way to establish baseline interest rates that a lender will want to charge an interest rate above. So for example, if you know you can make 0.4% on the Lightning Network by starting a node and charging fees and having really good payment channel management techniques, and then you knew you could lend to somebody on the street for 0.2%, the odds are you're not going to make that decision to lend to the person on the street because you can lend to the Lightning Network for a higher interest rate. But if the person on the street is willing to pay you 5%, you're like, okay, should I make 5% by lending to this random person, or should I make 0.4% by lending to the Lightning Network? And that spread of 4.4% or 4.6%, sorry, that is what we consider a risk premium in finance. So that's the premium above the lower risk alternative that you need in order to make that loan. And these types of relative value comparisons are the foundation of any capital market. That's why in the article I give the example of Walmart and General Motors, so that you have an idea that they both are relating their bonds to the US Treasury rate, right? And then you can look at Walmart and General Motors and look at each spread to US Treasuries and say, okay, I can see that the market thinks Walmart is more creditworthy than General Motors. Now, you might have a different opinion. You might think Walmart is being threatened by Amazon, and I think General Motors is going to still keep making cars. So you say, I'll take the extra risk that's perceived by the market, get an extra return, and that's the decision I want to make. Other people might think that Tesla is going to put General Motors out of business and they'd rather be in Walmart. So those types of decisions happen every day in capital markets, and hopefully are going to start happening in Bitcoin, where rates across the risk spectrum will be more transparent for everybody to see.
See, and there's a bit of a pushback in the chat. I see this more as things we need to do so that Bitcoin will be taken seriously. If people can't base their loans on something, they don't have that establishing number, we can't build all of these other structures on top of that. And if we're going to replace the whole financial system, like I think we're going to replace it, we're going to need all of that structures, whether we like them or not. Now, some people are comparing this to a central bank, but I don't really see this as a good comparison, because a central bank, so much of it is about making those deposits and then making more deposits and making more deposits, and they don't really have the assets. Whereas if you're going to stake Bitcoin on the Lightning Network, even if you're Amazon.com and you're the bluest blue chip stock in the world, you actually have to buy the Bitcoin. You actually have to stake the Bitcoin. They have to physically be there, or the system just doesn't work. So would you compare this to a central bank?
No, definitely not. A central bank issues a currency, and so a Lightning Network doesn't issue a currency. The Lightning Network uses a currency called Bitcoin. Uh, the Lightning Network is actually more akin to an interdealer market, and what that means is that it's actually more similar to a fully reserved interdealer market. And what I mean by interdealer is banks that trade with each other, right? The banks are not the entities that create the currency in a fully reserved system. In a fractionally reserved system, a bank can create currency. They have to have reserves of the base currency, but they can create money. In Lightning Network, you can't create money. You have to have the money to put in the channels to facilitate that flow of money from dealer to dealer, or in this case, node to node. So I actually see Lightning Network more like uh, a fully reserved interbank market. Interbank or interdealer kind of mean the same thing. Now, so you can think of a node as a bank, sure, that you can make that analogy, because they'll have channels coming in and going out, and they're facilitating payments, but they cannot create Lightning Bitcoin. That there's no such thing as a Lightning token. Lightning Network is just a way for people to transact real Bitcoin with each other. And so, I think the analogy of a central bank is a poor one, and any criticism of this being a fractionally reserved system, is, in my opinion, inaccurate.
And that's why I think this is such a unique idea, going back to the initial quote that this is the most unique income producing asset in all of monetary history. Most of the rest of the time, if you want to make money off something like this, you have to trust the stockbroker, you have to trust the exchange, you have to trust someone else who's going to hold that money producing asset for you and send you back the little pieces of the money. This is the first time, like you're saying, and with the technology where you actually hold the lightning keys. If you have a malicious counterparty, if you have some kind of a security problem, you could always pull what you have back in Bitcoin and then it's yours. You have it again. Right now, there's a lot of exchanges. There's a certain exchange, it rhymes with a baseball term, BTC, and people are very uncertain about it and they're taking their money out and they're worried that they're going to lose all of their money. In this situation, if you were lending your money on Lightning Network, even let's say it was like $1 million and you were lending $1 million and you decide all of a sudden you don't feel good about the Lightning Network, something's changed, you could still claw it all back. Is there any other asset that's like that? Any other stock or bond or anything even close?
No, and if you think about the U.S. Treasury, that's why I put that example in the article. The U.S. Treasury hasn't defaulted in a couple hundred years, and so in nominal terms, that's a way of saying that they always pay back the money, whether it's worth as much as it was when they borrowed it in the first place. Money can erode over time, especially in the fiat world. But yes, they always nominally pay you back. But does that mean that the U.S. Treasury will never ever default, or that they could not ever default? No, there is still that possibility. So it's considered the risk-free asset in finance, but we all know that the correct term should actually be the lowest risk asset in the system perceived by the market, right? But that's too long, so we shorten it to risk-free, and especially because the U.S. government has exhibited a very, very high level of creditworthiness over a long period of time. That's why the market considers U.S. Treasuries the risk-free rate. But still, the potential for the U.S. government to default is always going to be there, and so that's not really the case in Lightning Network, where you have the ability to close channels and broadcast correct states to the blockchain, and then take back custody into your own cold storage.
And that's really what's so exciting about this. Because of the technology, we can say things like there's more than a non-zero chance that the US government might fail, but there's closer to a 0% chance that the Lightning Network would fail. We're actually under them. They're practically unbeatable. Like you say, they're risk-free. Everyone uses them as the standard. But underneath that is this new possibility with Bitcoin. Just in the same way, the gold bugs thought they had the perfect asset. It's held value since Roman times. It's a little difficult to carry and it gets pretty heavy if you have a couple of bars. But compared to Bitcoin, they didn't see what was coming. They didn't see it hit them at all. So if we're under gold, and then if Lightning is under the bank rates and the treasuries, what's next? What else is there for Bitcoin that we can take down in the old financial system?
So you bring up two things that I want to address. The first is the Lightning Network having a risk that's potentially less than the U.S. Treasury. So I'll push back a little bit. If we look at where the U.S. Treasury rates are for, let's say, 10-year U.S. Treasury bonds, they're around 3% right now. If you actually look at Germany, in the 10-year German Bund rate, which is their government bond, that's actually underneath 1%. So Germany actually has a lower interest rate than the United States, but those bonds are denominated in euros, right? Our bonds are denominated in US dollars. So Bitcoin Lightning Network income is going to be denominated in Bitcoin. So you actually can't make the comparison across base currencies. You can't necessarily say that Germany is more creditworthy right now than the United States because they have a lower interest rate, because the denomination of the currency is different. So Lightning Network income is going to be denominated in Bitcoin. And so you can't necessarily make that comparison to something denominated in dollars. So that's the first thing. And the second thing I want to address is about gold. This is actually part of the reason why I decided to dedicate my time to this idea of Lightning Network interest rates, because the knock on gold has always been from traditional finance that it's a pet rock. there's no income associated with gold. And to be honest, they're right. Just like if you have a gold coin in your pocket, that gold coin is going to be still one gold coin tomorrow. You're never going to make money from that gold coin while holding it in your pocket. If you want to make money from it, you loan it to somebody, but you have to hand over that gold coin. And hopefully, in a year's time, he hands you back a gold coin and then, a little bit of interest as well in the form of gold or whatever, denomination he wants. So, Bitcoin now having an income opportunity and getting to actually graduate above this digital gold analogy that we've had for Bitcoin for 10 years now, I think it's really, really exciting.
That is pretty exciting. Gold people have never had a way to make interest. They've always held their asset, and that's been enough for them. But if we were to offer people a store of value that you could also receive interest on, we're beating gold.
Right. And again, that to go back to what we were talking about earlier, the interest is in the form of routing fees. But those routing fees don't just come out of nowhere. It's a zero-sum game in Lightning Network, and those fees are going to be paid to you by somebody else who's going to have less Bitcoin than they previously did.
Now, you mentioned at the end of the article that you're going to need UX or UI changes to the Lightning Network. What kind of changes do you envision to a Lightning wallet? Would it show you the interest rate before you stake your Bitcoin, something like that? Or is there more that would be needed?
Well, so I don't have any command line expertise when it comes to Bitcoin. So I need, for me to be able to have a Lightning node then and manage all my payment channels, I'm going to need some sort of better user interface. So I was more, speaking from those terms, but also, yes, hopefully in your Lightning wallet, we'll have a way of seeing, this is what you've earned in terms of interest rates on your node so far. This is what you could potentially earn, and there's a lot of development that needs to happen, from the wallet perspective and from the Lightning node perspective in order to get there. But my idea is to have us calculate these things at least in a backwards looking way before we can make any assumptions on what the future return might be.
And additionally, there might be a new type of Lightning client that people aren't really thinking about, the large holder client. If you think about Amazon, if they were going to put $1 million into Lightning Network, they're not going to use a wallet on their phone. They're going to need some kind of an advanced wallet. Like you're saying, there's these potential malicious actors, there's security problems. They're going to need a wallet that's ready for those. So maybe there's a whole new class of application for a large lender that we just haven't even thought about yet.
Right, and if you look at what Jack Mallers just put out with his Zap wallet, he has a new desktop interface, a new iOS interface. These are the types of innovations that we're going to continue to see. We're going to continue to see Lightning, development accelerate. And I mentioned a day or two ago about how I have to keep up with two protocols now. And without a heavy computer science background, it's like it's nonstop what we have to look at in terms of all these developments, exciting improvements to Bitcoin and Lightning each.
So now your next article is called "Next Step for Node Rates," and we were talking about this idea that we could get a Lightning Network reference rate or an LNRR. And once we have the Lightning Network reference rate, you generally know how much interest you could make. You know if you want to lend out the bitcoins or not. You can start to make decisions. What kind of things are you looking for? Maybe just generally, do we need agreements from banks? Do we need agreements from governments? Is it mainly technical improvements that we need? What are the kind of barriers standing between us and this rate?
Yes, so the improvements that we need are definitely technical. They don't come from any government or anything like that. And the TLDR of this article is basically to say let's forget about the Lightning Network reference rate for now, because the reference rate is going to be an average or a synthesis of a bunch of different individual nodes rates. The point of this article is let's focus now first on how we can calculate individual nodes interest rates, and that means formulating a calculation method. What time period are we going to use? Are we going to use blocks, individual blocks? Are we going to use the number of blocks that are estimated in a year to make it similar to traditional finance? How are we going to calculate the interest? Are we going to look at each channel? Are we going to look at the node level? I think that people are more leaning towards the node level to calculate interest instead of individual channels. But you could do individual channels, right? How are we going to calculate the amount of principal that you're using in your calculation? Is it going to be the amount of Bitcoin that you have in all your channels at one specific point in time? Is it going to be an average over time? So these are all the issues that I bring up in that article, where I'm asking a bunch of questions to developers. How do you guys think that we should formulate a calculation method? Now, I would like to see at the beginning a lot of different ways, right? That way we can test and try and see what kind of methods work. But my hope is eventually that we can come to a consensus and maybe make it into a protocol, either on the Lightning layer or a separate layer, where we can all have some sort of a calculation standard that we agree upon the way that we're going to calculate rates. And then a big issue here is privacy and verifiability. So, I am starting to circle the idea, talking to Lightning developers, that it is potentially impossible to prove the rate that you say that you earned on your Lightning node, and so that will introduce a layer of trust. And so I'm trying to think about ways around that, or how we can minimize the trust, or if we do have to trust, to have some sort of framework around that type of um, disclosure of the rate that you're making on your own node.
Yeah, I was thinking the opposite. I don't know how we can prove it, but we need to prove that everyone is getting the interest rate they're getting. But at the same time, like you're saying, that might de-anonymize them, that might cause other problems. But everybody hates trust. Nobody wants to just trust these interest producers. It just seems like a bad idea if they write a bad rate and then someone invests their money based on the bad rate, they're going to lose money. It seems with all the digital technology and everything, we should be able to provably do it. Is there any way? I mean, could we? I hate to say this. Could we write it to a blockchain or something? I mean, could we store it in a database? Could there be a separate monitoring party that maybe could monitor these transactions? Are there any solutions, or are we just still looking for something trustless here?
We are still looking for solutions. I'm really happy to get the conversation going. I'm in the Lightning Slack, which is the L&D Slack, which has been a lot of fun. I'm learning from a lot of really smart people over there, and I'm in conversations with different Lightning developers and people that are trying to innovate different sort of solutions on top of Lightning Network. And so, I'm just out there trying to learn and trying to talk to people and uh, see what we can do here.
We'd just like to thank Tony in the chat for sending us a $20 super chat donation. Thanks, Tony, for your support. And yeah, it seems like we do have some technical issues in front of us. I would like to see a provable Lightning interest rate, like you're saying, verifiable, especially if we're going to go and say, General Motors should base their stock on us, or, you should take out $1 billion loan, or, Amazon starts putting serious money into staking these coins. They're going to need an accurate rate. So I don't know the solution to that problem, but we need to continue to search for one.
Absolutely, I agree. I think the more provable and the less trusted, uh, the better.
All right. And then you had a third article today. Maybe you could just explain the basics. It says it's called Observations from Alex Bosworth's Tweet on Fees. And it seems like Andreas and Alex both have Lightning nodes, and they're both making a different amount of money from their Lightning nodes. So, what can we learn about this? What does this give us on our way towards a Lightning interest rate?
Sure. So, Alex Bosworth put out a tweet where he compared the fees earned from two different nodes, his and a man named Andreas, who has apparently one of the largest Lightning Network nodes out there. I thought that this was really interesting because I calculated it. The interesting thing is he actually posted the amount of money in his node in US dollar terms, but the fees that he made in Satoshi terms. So that was actually funny to me because it's actually uh, you know, one of the first things that we have to do is we have to agree which terms we're going to use when we're comparing. And obviously, you have to convert dollars to satoshis before you can calculate that interest rate. But separate from that, Alex Bosworth proved that he or disclosed that he made approximately 7.77 satoshis per block for a week versus Andreas making 4.17 satoshis per block for an entire week. And the interesting thing here is not the fact that Alex made about 2 times as much per block than Andreas is. It's that he actually made an interest rate 80 times, approximately 80 times what Andreas made because he did so with so much less money. And so Alex showed that he's making about 0.4% on an annualized basis, while Andreas was only making 0.05 percent.
And what's great about this is they're both taking the risk. They both have that asset that we're talking about. It could be clawed back at any time. But this really shows that there is something to this fighting off the bad actors, having good security. Something that Alex is doing is better than whatever Andreas is doing, and it's allowing him to make more interest. I don't know of any other bank that's ever worked that way. I've never deposited my money just right, so I made more interest or something like that. This is
Right.
totally new, right?
Right, and I meant to say 0.005, so it's less by a factor of 80. And yeah, I mean the conclusion here is that Alex is doing something better than Andreas to make money. That's a very easy conclusion to make. Now, what exactly is he doing? Those might be trade secrets that Alex has, but he's also been, very open in disclosing some of the methods that he's using to maximize his income on Twitter. So I definitely suggest you go follow at Alex Bosworth to really learn about payment channel management and optimization and position in the network and having people open channels to you because he says, opening channels outwards is easy, but having them open channels to you is something difficult. So he's obviously doing something right. That's why he's making 80 times the amount in interest terms, even though he's only making twice as much. Look at the amount of money that each node started with. It's quite staggering. So, and Alex Bosworth made sure to remind Twitter that these results are not indicative of anything in the future, um, which I think is important to state again and again. That he just wanted to put some data out there. Does that mean that anybody can make 0.4% on a Lightning node today if they set it up? No, and odds are you won't be able to make as much as him because he obviously is exhibiting some expertise here that I'm not sure everyone else has. But everyone else is welcome to try and compete and start their own node as long as they have some Bitcoin that they can open channels with. They can compete, and so this is how a market develops, and it's pretty exciting.
Well, and I respect his honesty on that because I was going the other way. I was ready for him to start a company lending Lightning and we could all invest and we could all make lots of money, but then we'd have to trust our money with Alex and he'd have to lend it out for us. But these are really only like 2 data points in a potential sea of data points. So you're right. We really can't say that this is going to be the interest rate or it'll be anything like this. But it is exciting to start to get this data. Where could you get more data like this? Do we just need more Lightning nodes to publish, or could there be like a way they could automatically publish this or something like that?
Well, that's the point here is let's try to get to a point where we can all publish to each other in some sort of agreed upon method where we can all quickly compare, or the software can quickly calculate it for us so that we can all compare our interest rates with each other. But for now, hopefully people just post stuff out there, on Twitter and in Slack, and show what they're making, and we can make some conclusions from that, and hopefully motivate others to start nodes and publishing rates and establishing some sort of system and feedback loop.
Now, to lend these Lightning, do you need to start a node? Do you need to just run the network? How much is the overhead to do this?
Well, you would have to have a Lightning node. So to have a Lightning node, you need a fully validating node beneath it. So whatever way that you can run a full node, if you can run a full node, you can run a Lightning Network node on top of it. So the overhead really is however much it costs you to run your full node. Um, and then as far as what you need, you need Bitcoin, right? You're not going to be able to attract uh, you're not going to be able to make routing fees unless you attract people to use your channels, and people are not going to use your channels if you don't have enough Bitcoin capacity for them to send through, because the amount of Bitcoin you have in your channel has to exceed the amount of Bitcoin that passes through your channel. So if you open a bunch of channels with 5 Satoshis in them each, it's unlikely people are going to use your channels. But if you have a bunch of channels open with a large amount of Bitcoin in each of them, you're more likely to make money. So their barrier really is only the software that you need to run and the Bitcoin that you need to stake.
And just to, again, to hit home the economic differences between the Bitcoin system and the current system, people are still trying to compare this to a central bank. A central bank oftentimes can print their own money. The reasons that the libertarians call the US currency fiat is because it can just be printed act. They say, print a bunch of bills. We need to buy some bombers. They print a bunch of bills. They buy some bombers. That's it. The word fiat means let it be done. So it's an act of Congress. So the word creates the money. With both Bitcoin and the Lightning Network, even if you're Amazon, even if you're a core developer, even if you're Satoshi or whatever, you can't create any more money out of nothing. So this is totally different than the old system, right?
That's right.
And we also have this thing where I've been talking about how in the current system, yeah, you can print the money for weapons and war, and it's bad, and you won't be able to do that under the Bitcoin system. But you also won't be able to produce disaster relief or road funding or build a new dam money or whatever it is. Money and everything is really going to change. You actually have to have the money to pay for the bill. You can't just do this deficit spending, these credit cards. Just like you're saying, if you set up Lightning channels, even if you got the best name in the business, if you don't have money in your accounts, actual money there, no one can use your Lightning system. So it's a wholly new kind of bank where the reserves have to be there for the system to work.
That's correct. Lightning is a fully reserved system.
And that's why there's been so many people trying to say that it's a new currency or something, or it's not related to Bitcoin, or that they've given up on Bitcoin. These all seem to be FUD. It really is a linked currency system. It's something that exists to represent something else. It's a programming concept, so I can see why a lot of people aren't getting it. It's a pointer, but if you haven't studied that, it's not going to come up for you.
That's right.
So I think we've run through most of my questions. I'll see if there's any questions in the chat if you guys want to ask them right away. Otherwise, Nick, is there anything else that you'd like to talk about that you think we missed, or something you see happening in the future, something like that?
I'm really excited about what has been happening so far, the feedback that I've gotten from Twitter and people reading my blog on Medium. So I appreciate all the feedback. Keep it coming. Keep the ideas coming. You can follow me at time value of BTC on Twitter, same handle on Medium. And I really am enjoying being in the Bitcoin community and discussing these ideas with people, and hopefully we can keep it going in an open source and transparent sort of way.
Well, that's what I think is great about the Bitcoin community. Whether you're a young kid just studying computer science, or if you have finance degrees and you're from the economics world, you can come together and talk about these ideas. And your idea is just as valid because we're all thinking this out, and we all haven't thought of this or we haven't thought of that. And when they were discussing segregated witness, I think Luke Dash Jr. casually mentioned offhand that they could do it as a soft
Soft
fork.
fork,
And
right?
this idea penetrated the whole community, and all these other people, their heads just flipped on, and they're like, "Oh my God, we could do it as a soft fork." And until he just put that out there, nobody knew of it. So we never know where that genius is going to come from, and we want everyone to participate. So I think it's a really exciting space.
Yeah, and I'm happy to be here. I'm happy to be part of it.
All right, looks like we've got a couple of questions. They might not be directly related to this, but we'll try to help them too. Emma asks, Is the Lightning Network a different ledger? Will her wallet show two different balances in the future?
I believe that the Lightning Network wallets that are showing up now, that have both Bitcoin and Lightning capabilities on them, are showing different balances. Um, and as far as is it a different ledger? Technically, no, because you everything can settle back to the base ledger, but you do have a ledger with each channel that you have kind of at all times. So I guess the answer is probably yes and no there. Sorry to not be more specific.
It's kind of like using your Starbucks card, and you want to put a little bit of money on your Starbucks card so you can always buy coffee, but you don't want to put your life savings on your Starbucks card.
Right.
So you'd have a bunch of little Starbucks cards for buying coffee or buying stuff at Amazon or something like that, and you'd use that to send around your small payments. So yeah, it's going to take some getting used to. It's going to look different in your wallet.
Yep.
Uh, They've also got another question. This is just kind of a classic Bitcoin question. So, if there was a crisis and there's no power, how would Bitcoin work? And if you can't handle this one, I'll give it a try.
Sure. Go ahead.
All right. So if there's no power, there's still going to be some people with generators or bicycle powered generators. They might be able to run their version of the blockchain. If we still have the satellites in space, we might be able to link and synchronize the blockchain, at least download new data. Broadcasting to it's going to be a big problem. But as with all of these end of the world situations, if we've lost the internet, if we've lost power, Bitcoin's not going to be your number one concern. You're going to shrug it off. Everyone's going to be doing the new kind of trading, which is miniature bottles of whiskey and toilet paper. Very portable, very splittable. And the great thing about the little bottles of whiskey is they don't expose your whole supply. Unlike Bitcoin, I can't just follow that transaction chain back to your wallet and see how much whiskey you're sitting on.
That's
So
right.
yeah, if we're in the apocalypse, we're in the apocalypse. I'm not going to worry about, oh, how am I going to get my Netflix? Well, Netflix is doomed in the apocalypse too, but that's not a reason to sell their stock. So,
That's right.
all right. So that was a good question. Let's see what else we've got. So yeah, back to the lightning thing. Yeah, it's really kind of like you would put your money in your Starbucks card and then you don't have your money in Bitcoin. So if you want to buy a Lambo in Bitcoin, you might have to cancel your Starbucks card, bring that money back to Bitcoin,
And,
marshal
and
your forces. Yeah.
And here's the way I actually think about it. I think that the difference between Bitcoin and Lightning is settled versus unsettled. So the settled Bitcoin is yours and it's in your wallet and it's not held in any sort of time lock. But your Lightning Bitcoin is unsettled because that state hasn't been broadcasted yet to the blockchain. So you can at any time broadcast and that Bitcoin becomes settled rather than unsettled, but that's kind of the way that I'm thinking about it in financial terms. I think it makes sense to me.
All right. And I think we found a good comment to end on. Maximal Liberty says, at that time, one USD will be more valuable than a square of toilet paper because a dollar bill can be washed and used again because it's made of cotton. So I think using the dollar bill of toilet paper might be a good point to end on. I just wanted to show the QR code so you can support this show. If you've got some extra Bitcoin or any of these altcoins that the Trezor accepts, you can donate now. I also wanted to highlight my friend DJ Booth's project Tallycoin at tallyco.in. And this is beta software, it's under development. But basically, what you do is you bring your own Bitcoin address. You set your fundraising amount, like if you want to raise $100, and you set when you want to raise it by, and that will create your own tally coin right here. Here's mine. I'm trying to raise $100 to buy a vintage typewriter that I don't really need, that Tom Hanks recommended that I buy in a documentary about typewriters. So as you can see right here, if you donate Bitcoin, the amount will go up on this thermometer, and this will show how many Bitcoins we've received today, and that'll change day to day. And anyone can use this for any kind of fundraising. It doesn't control your keys, it doesn't control your money, nothing like that. If you want to support this website, you can donate to Tallycoin. I think he's going to run a Tallycoin for Tallycoin. So it's a pretty cool idea. Check out Tallycoin and you could donate to us there. Nick, one more time, where can the people follow you on Twitter? What's your website?
It's at time value of BTC.
All right. Well, thanks so much for joining us, Nick, and be sure to let us know when you've written a new article, and we can talk about how this is moving forward. I hope we've assuage some of the people in the chat who are worried about us becoming a central bank or getting in league with the bankers. I know it's a bummer we have to use their jargon and their semantics, but like Nick is saying, if we can establish this interest rate and we can establish this low risk asset, we can start building things on top of it. And if we're going to take over the financial economy, we're going to pretty much have to build a mirror of it on our side to fill all of the needs it's currently filling. And this seems like part of that. So I
That's
think
right.
it's something we're gonna have to do.
And thank you so much for having me. I appreciate it, and can't wait to come on again.
Thanks so much. And until next time, which will probably be tomorrow morning, bye bye.